Capital budgeting is part of non-routine decisions. Okay, now when we say non-routine decisions, normally we talk about long-term decisions and short-term decisions. Okay, so ayan. So last time from our previous discussion, we already discussed short-term decisions under relevant costing. This time we're going to talk about long-term decision, no? And we are going to focus on long-term decision tools, which are called capital budgeting tools. Okay, now when we say capital budgeting, this is actually a technique to evaluate long-term investments. Okay, and the capital budgeting decision involves evaluation, tama ba? Evaluation of investment today, nangyayari ngayon. Investment today in terms of the present value of future cash flows from the investment. Now, when we say future cash flows from the investment, we are talking about cash inflows and cash outflows. Okay, so, ayun. Anong ibig sabihin yun? Nun, okay? We have to apply these tools, okay, so that when we compare your future cash flows, yung inflows and outflows, no, when we compare them, okay, as if these cash flows happened today. Okay, so ayun. Now, basically the objective is to identify the most profitable or best investment alternative. And ano pa ba? The cash returns can take two forms, no, depending on the nature of the project. If the project will produce revenue, the return is the difference between cash revenues and cash expenses. Okay, the return from projects which results in, let's say, cost savings take the form of negative cash outflow. So eto i-apply natin sa least cost decision. Okay, now conceptually, the results of both types of projects are the same, and the entity ends up with more cash by making the initial capital investment. So, yun yung mga kailangan natin tandaan on capital budgeting. Some examples, ayan, since these are long-term decision, ang dali lang naman i-analyze eh. Number one, the value is material, and then the life, no, is more than 1 year. So, decisions related to um, ayan, acquisition of equipment, di ba? Ang life niyan is more than 1 year, then that will be subject to capital budgeting tools. Or let's say expansion. When we say expansion, we are talking about, let's say, expansion of facilities, or let's say expansion in terms of capacity, yung ganon, okay? And yan, replacement of an equipment, okay, or certain systems, ayan. And then we also have your least cost decision. And when we talk about least cost decision, we're talking of long-term least cost decision. Kasi yung short-term nito, you have your example, make or buy, yung mga ganun, no? Which alternative will give you lower cost. Ngayon, kapag long-term na yan, okay, that is now what you call your least cost decision making. Okay po. And of course, there are more. Okay. Now, some decision approaches, okay, you should know the following. No? What's the difference between screening and preference decision? When we say screening, that's the initial step. This is also known as the accept or reject decision. No? When you evaluate your projects, whether they are acceptable or not. For example, we are using the tool, let's say, payback period. Okay? Mamaya, i-discuss natin yan. When we say payback period, okay, ang decision rule dito, the shorter, the better. And the payback should be within the life of the equipment. Okay? And, okay, the payback period should be lower than the maximum payback period of the company. So, let's just assume that you have projects A, B, C, and D. Okay, projects A, B, C, and D. And then, yung payback nila, acceptable si A, B, C, si D and E is rejected. Okay, so that's now what you call screening decision. Alin sa mga projects natin ang acceptable based on the tools that we are using. This one is a requirement. Preference decision, also known as ranking decision. Okay, so ranking decision. Isulat na nga natin, screening, also known as your accept or reject Okay, for preference decision, this is known as your ranking. Ayan, ranking decisions. Also known as capital rationing. Capital rationing. Ba yung spelling ko? Now, this one is optional. Okay? Normally kasi, if the project is acceptable, okay, di go. You pursue the project. Okay? But if there are limitations, especially budgetary limitations, you have to rank your projects so that you will know which project you are going to prioritize. Okay? That's why it's called ranking decision. Okay? So after screening, that will be followed by preference or ranking decision, also known as capital rationing or rationing. Okay, because this is when you are going to, this is when you are going to distribute your budget. Okay po. Okay, so ayun. Next, you also have your mutually exclusive projects and independent projects. Dapat malinaw sa inyo to. When we say mutually exclusive projects, choosing one project will result to the rejection of another project. Okay, so like for example, example ng mutually exclusive decisions or projects. Let's say, ano ba? You are just allowed to maintain one car. Ayan. And you're choosing between, are you going to repair the old car or are you going to sell the new car and buy a new one? Kasi isang car lang dapat. Okay, hindi pwedeng i-repair mo yung old and then buy a new one kasi magiging dalawa na. So by choosing the alternative na, let's say, repair the old car, you cannot choose the option na buy a new car. Yun yung ibig sabihin ng mutually exclusive projects. Now, when we say independent projects, okay, the acceptance of one project or alternative will not actually reject the other alternative, no? Like, for example, if we use the first situation, what if you can maintain more than one car? Okay, so, ano ba? I-repair ko ba tong old na car? Or bibili ba ako ng bago, ibenta ko yung old, ganun na lang? Or baka pwede kong itanggapin na lang silang dalawa kasi acceptable naman. Okay, I'll just repair the old car or delivery vehicle and then I'm going to buy a new one. So those are what you call independent projects. Okay? So, ayun. Now, some basic considerations when we talk about capital budgeting. Okay, the best tools will most of the time consider the time value of money. Okay, so, di ba? This is action number 2. Okay, under time value of money, it states that the money that you will be receiving in the future will have a different amount if you receive them today. Okay, so, ayun, okay? So, if that one is applicable, okay, and assuming this is our timeline, okay, ayan, let's assume that on this space above, ayan, you have here your cash inflows. And then below, you have here your cash outflows. Assuming that this is 1, 2, 3, 4, 5, 6, 7, 8, 9. Ayan. 9 years. Okay? Assuming every year you will be receiving 1,000. 1,000 every year. Okay, 1K, 1K, 1K. And then, at the end of the project, may salvage value. Kunyari, equipment to. Diba? So, burahin natin yan. Kunyari, equipment yan. So, may 1K ka din dyan. And then, at the end, meron kang 2,000 as your salvage value. Okay, so, aside from the uniform, eto, ang tawag natin dito ay even cash flows. Okay, pwede rin, this is 1,000, 1,000, 1,000, and then 500, 400, 400, 300. Okay, yan, diminishing uneven cash flows. Okay, so yun. And then let's say your outflows will be composed of your investment. Okay, at the beginning of the period, let's say you are going to invest 10,000. Okay, and then at the end of the, let's say, fourth year, you're going to incur repairs amounting to 2,000, diba? Outflows yan. Also, to maintain the equipment, you need an additional working capital, okay, of, let's say, 3,000 at the beginning of the year, which will be released at the end of the year. Okay, so how are you going to compare your cash flows? No, you cannot just add all of these versus the value of your cash outflows. Bakit? They happen at different points in time, which means if all of these cash flows, no, if all of these cash flows will happen at the same point in time, and that is time zero or at the present, iba na yung value ng mga to. Okay, so to make them more comparable, you have to get the present value of all your cash outflows and the present value of all your cash inflows, and then you compare them. Okay, so ayun. Next, okay, we focus most of the time in your net cash flows. Okay, now take note, it's cash flow. Why? Cash, not profits, is king. We don't use the profits. Well, siguro for your accounting rate of return. Okay, yan. And aside from that, it is net. Okay, net of standard deductions, like for example, your taxes. Ayan, mas maganda yung mga tools that uses net of tax cash flows. Okay, and your decision will be based on the net of cash inflows and cash outflows. So, ayun, two very important considerations in capital budgeting. Okay, the use of time value of money and the use of your net cash flows. Yan. Types of capital budgeting tools, actually madami yan, but these are just the basic. Number one, you have your net present value, okay, and then internal rate of return, your profitability index, payback period, and then your accounting rate of return. Didiscuss natin yan maya-maya pag may example tayo. Starting with your net present value. Okay, so what is the net present value? When we say net present value, this is basically the difference, no, of the present value of your cash inflows versus the present value of your cash outflows. I prefer this approach. Although there are some approaches na tama naman, present value of your cash inflows minus your investment, that is under the assumption that the investment is the only cash outflow. And what if you have related expenses, no, in the future? For example, yun na, major repairs, or let's say renewal, option to renew, the cost to renew, and so on and so forth. Okay, and ano yung decision rule natin dito? The higher the net present value, the better. It should be positive or at least man lang zero. Most of the time, no, the following items are given. So, kunyari, minimum rate of return. This is the return that the company should earn so that the value will be unaffected. Maglagay na tayo ng example nga. Kunyari, your minimum rate of return is 6%. Tapos, let's say, ang investment mo ay 10,000 na lang para mas madali yung mathematics natin. Let's assume that this investment will give us a cash inflow of 2,500 every year, and then we have a life of 5 years na lang. Okay, so you have life of 5 years. Wait lang, asan na ba yung calculator natin? Bakit wala? Hindi ko mahanap yung... Okay, basta yan yung example natin. So, what are we going to do? First, we need the present value of your cash flows. Doon muna tayo sa pen. Bakit nawala na yung pen natin dito? Control P. Mahirap. Gamit mo natin yung yellow na yan. So, what is the present value of our cash inflows? Ulitin natin. Kunyari, before tax, no? Let's say before tax tayo. So, you have 2,000, tsaka iba-iba. 2,500 times the time value of money factor or present value factor. Present value factor. In this case, dahil periodic siya, we're going to use the present value factor of yan, annuity. Yan, or periodic present value factor. And based on the life of 5 years, let's write it down, okay? The present value factor for 6% for 5 years based on the table, okay, is it's around 4.212. Okay? Ayan. So we're going to use this 4.212. If you are going to multiply that, you will get something like 10,530. Okay. What about the present value of your cash outflows? This is the only outflow that will happen at point 0 since it happens at the present point, no? Okay. Ibig sabihin nito, yan na yung present value niya. So our net present value is now 530. Are you going to accept the project? The answer is yes. Okay, some things for us to remember. If your net present value, is greater or equal to 0, yan. If it's greater, the meaning is it was able to earn the minimum required rate of return, which is 6%. Yan. Let's try to erase that. Baka malito kayo eh. Ba tayo nang ma-erase? Ayun. Anyway, ayan, 6%. If it's equal to 0, then it's actually earning equal to the minimum required rate of return. So, ibig sabihin, acceptable pa rin. Ngayon, if it's the opposite, if NPV is less than 0, and nag-negative siya, you have to reject the project. Because it means that it's earning below 6%, which is the minimum required rate of return. Also known as our hurdle rate. Okay? So, ayun, that's the decision rule. So, this means that the return of this project is greater or equal to the minimum required return, which is most of the time your weighted average cost of capital. Okay, so ayun. Now take note, this example is before tax. Let's have another example. What if, no? What if? Pwede ba natin ganyan? Let's assume that we have a tax rate, no? We have a tax rate of 40%. Now, we have to remove the tax in your present value of cash inflow. No? So, paano na yon? The present value of your cash inflow, let me write it down, will now be equal to, ano bang mas magandang approach dito? Will now be equal to 2,500. Okay, so that's the return less the depreciation. Okay, so tatanggalin natin yung depreciation. Wait lang. Let's multiply this by 40%. Yung 2,500, I'll explain this later. Hindi ko alam kung paano ko ito mapagkakasya eh. Ayan, sasabihin na naman, sir, hindi po namin maintindihan. This one is 2,500. Here, let me explain. 2,500, okay, 2,500 is the return in the form of cash. Since we are going to compute for the tax, okay, we have to deduct our depreciation muna. So, what is our depreciation? Okay, the depreciation is your cost divided by life, di ba? So, you have 10,000 divided by 5 years. So, that is now your depreciation. Okay po? This one is now your net income. Okay. Times 40% is your income tax. Okay po? Okay, so once you have your income tax, that's the only amount that you're going to deduct, okay, from 2,500. Okay, and in this case, you will arrive at your after-tax present value cash inflow of 9,687.6. Now imagine if you compare that with your investment or the present value of your cash outflow, which is 10,000, wala na. Okay, your NPV will now be negative because your cash outflow is greater than the present value of your cash inflow. Okay, so ano to? So that's the present value of your cash inflow. Another way to understand this is if all of your 2,500 for 5 years, okay, if you're going to receive this today at this point, what is the value of that? Okay, considering the time value of money, it will be 10,530 before tax or 9,687 after tax. Syempre, okay, ito yung susundan natin. Okay. Bakit? Kasi mas maganda yung net cash flow kapag after tax na yung basis natin. But then again, I just showed you this one. I showed you both approaches kasi pagdating sa board exams, sometimes sasabihin ng problem, ignoring the effect of taxes. Hindi natin magiging basis mo. Okay? Or sasabihin niya, if a tax rate of 40%, if this one is given, and then walang sinabi na ignore income taxes, then you have to consider the effect of this 40%. Okay po? Now, there's another way to compute for this 9687. What you can do is 25, yan, less 2,000, you will now have your net income which is 500, okay, times 40%, okay, what is 40% of 500? Okay, 40% of 500 is 200, okay, so that is now your tax, diba? 500 minus 200 equals 300. And then, what's 300? That's your net income after tax. Okay? And then you add back your depreciation. Why do you have to add back your depreciation? Because depreciation is a non-cash item. And when we compute using capital budgeting techniques, sabi natin kanina, we focus on the cash flows. Okay? So, nasundan po. You will have the same results, no? I think what you will get here is 2,300. Tama ba? Okay, so 500 times 40% is 200. 25 minus 200, you will get 2,300. So, ayun. Or kung susundan nyo yung sinabi kong approach kanina, you have here your cash flow. Sulat ko na nga. May mga tamad kasi makinig eh. Ito para sa inyo to. Makakabawi din ako sa inyo. Okay, less your depreciation, okay, which is 2,000. Paano ulit na-compute yung depreciation? That's 10,000 divided by 5 years. Okay, so this is now your net income, which is 500 less your tax, okay, which is 40% of that. What's 40% of this? This one is 200. You will now have 300. And then we add back the depreciation. Siyempre, cash flows. And this one is a non-cash item. Sara. And you will now have 2,300. Your cash flows net of tax. Okay po? So, ayan. This is the favorite eh. Ayan, sa lahat ng capital budgeting tools. Okay, next. You also have your profitability index. Okay, what is the profitability index? Okay, parang net present value din yan. You have the present value of your cash inflows. Instead na less, okay, you divide that by the present value of your cash outflows. So, based on our earlier discussion, what is the net present value of your cash inflows? Okay, in the absence of taxes, it's 10,000. Let's go back. 10,530 less 10,000. Okay, so i-divide mo yan. This will be around 1, 2, 3, 4. Lipat tayo. 1, 2, 3, 4. So this one will be 1.053. Okay. So what is your decision rule here, no? As long as your profitability index is greater than 1, accept. It means that it's earning more than the minimum required rate of return. If it's equal than 1, okay pa rin. It means that it's earning a return equal to the minimum required rate of return. So, ayun. If it is less than, ay i-reject mo na yan. Okay, i-reject mo because it means that it was not able to earn the minimum required rate of return. Okay po? So, ayun. Now, this one is actually used to compare projects. If you go to net present value, you can use this to screen projects. It's just that it's not good, no, to compare projects using net present value, especially if they have different sizes. No? That's one. Different sizes and different life. Ayan, so hindi pwede ito. Now, to solve that issue, you now have your profitability index. Okay, this is as good as using net present value, but this time removing the issue on the size of the project and the duration or the life of the project. Okay? So, ayun. Now, sir, what if after tax yan? Okay, so kung nag-after tax ka, the net present value now of your cash inflows, no, as computed earlier is 9687. So, that will be 9687.6. Paki-recompute na lang. So, you divide that by 10,000. So, lilipat ka ng 4 zeros, 1, 2, 3, 4. You will get a profitability index of 0.96876. Ayan. So, this one will be rejected kung after tax. Diba? This one will be accepted kung before tax. Ano yung mas maganda sa kanila? Dito ka na because you were able to consider the effect in taxes. Okay. So, ayun. Ano pa ba? Yung kailangan nyo malaman. Your internal rate of return. Okay? What is your internal rate of return? This is also known as your time-adjusted, no? Time-adjusted rate of return. This actually determines the rate of discount. Okay? Yung rate na ginagamit natin to get the present value. Diba? Reviewing Math 15 or Math of Investments. Okay? When we say compound, you compute for the future value. When you say discount, you get the present value. And the rate that you use to get the present value is your discount rate. So, ano ulit yun? Sabi niya, your IRR determines, ano ba sinasabi ko kanina? Determines the rate of discount at which the present value of your future cash flows will be equal to the investment or future present value of your cash outflow. Okay, so paano po natin i-illustrate yan? Okay, sulat nga muna natin dito. Sabi natin, the present value of your cash inflows. Oh no, outflows na lang. Ito tayo. Mas maganda. The present value of your cash outflows equal to the present value of your cash inflows. So, ano yung rate na gagamitin natin para yung present value ng cash inflows is equal to the present value of your cash outflows? Based on our example, yung cash outflow natin, yun yung investment natin kanina, di ba? Review lang natin na 10,000 yun. And your cash inflow every year is 2,500. Okay. So, what is your cash outflow? Isa lang naman yan. That's 10,000. Ibig sabihin, this one should also be 10,000. How do you compute for the present value of your cash inflows? Diba, ito yung time value of money factor or present value factor times, okay, times your cash flows. So, dito, you will now have, okay, yung factor na hindi natin alam, time value of money factor or present value factor is the same, times 2,500. Okay, so if you try to work back, ano yung multiply mo dito, di ba? 4. So that's now your factor, 2,500. Yan. Now, working back, or you can use your table. Okay, this one has a life. Nakalimutan kong isulat. Ano ba yung life natin kanina? Parang 5 years yata. Okay, so 5 years. So, Your internal rate of return now, okay, will be that return which will give you the time value of money factor, okay, at at 5 periods. Okay, so at 5 periods, titignan mo, dapat ito ay 4. Okay, so ano ngayon yung rate na yan? That is now your internal rate of return. And, okay, approximately, that will be 8%. Most of the time, approximation lang yan. Okay, even in board exams, okay, you approximate the internal rate of return. Sometimes the choices is, the choices are letter A, sasabihin, higher than 5% but lower than 10%. And higher than 10% but lower than 15%. So, yung mga ganun, no? Or higher than 8 but lower than 9%. Something like that. Or sometimes the question is, compute for the internal rate of return. Sasabihin, choose the closest answer. Okay, so ayan, i-approximate yan. Kahit gaano ka kagaling mag-interpolate, puro approximation lang to. Now take note, what we used is the before tax cash flows. Now what if we used your before tax ay after tax naman? Ano yung after tax natin kanina? Earlier we computed that at 2, 3. So dito tayo. Okay, 10,000 should be equal to this factor times 2,300. Okay, so pag nag-work back ka, may calculator ka, kunyari na-compute mo na, okay, that will be 10,000 divided by 2,300, ang makukuha mo is around 4.35. So, with a period of 5 years, okay, for 5 years, your approximated internal rate of return is around 5%. Now, your internal rate of return should be compared, no? Okay, your internal rate of return should be compared with your minimum required rate of return. And this one should be higher. Mas mataas dapat yung IRR. IRR should be greater or equal than your cost of capital or minimum required rate of return so that it will be accepted. Okay. Now, in this case, our minimum required rate of return is 6%. Okay, so kung ginamit mo yung before tax, 8% siya, it's acceptable. Okay, acceptable siya. Kaya nga lang, pag after tax, it is rejected. Siyempre, kung given pareho, we are going to use this. You're going to reject the project. Pero again, okay, pag yung problem, basahin nyo mabuti. Are you going to ignore the effects of taxes or are you going to consider the effects of taxes? Okay, so that's your internal rate of return. Payback period, very easy. Okay, your payback period is actually the number of years or the number of periods that you need to recover your investment. Okay, it emphasizes, doesn't emphasize on profitability. It emphasizes liquidity and of course the risk. The shorter the payback period, the better kasi the easier you can recover your investment. And habang mas mabilis ka mag-recover ng investment, ibig sabihin nun, mas mababa yung risk ng project natin. Most of the time, ang kailangan mo dito ay yung investment. So, ano ba yung investment natin kanina? 10,000 and your annual cash flow of 2,500. So, what is now your, divide mo na lang, your payback period is now 4 years. This means that you can recover your investment within 4 years. This is, well, before considering the effect of taxes. Okay? So, ayun. And this one is good kasi, well, in the absence of the maximum payback period, okay, this 4 years is within the life. Okay? Ano ba yung life ng asset natin? The life is 5 years. Based on our earlier example. Imagine, ang payback period mo 6, pero yung life niya ay 5 years. Wala na. Okay? So, hindi na siya acceptable. Okay, so, ayun lang naman. Assuming, gaya nyo, assuming kayo, assuming we are going to consider the effect of taxes, so you have 10,000 divided by 2,300, okay? Ano yung makukuha natin dito? That will be around 4.35. 4.35 years. Okay, so mas mahaba. Wrong shortcut na nga, wrong spelling pa. Okay, so 4.35 years. Okay, so parang, ano ba yan? 4 years and more or less 4 months. Okay? So, ayun. What are the other things that you have to consider? Okay? Sabi natin, number 1, okay, payback period should be greater than the life. Okay? Although, we want our payback period to be as low as possible. Pero, look at this example. Now, let's assume you have project A. You have project A and project B. Okay, let's just assume that the payback period for project A is 8 years and the payback period for project B is 10 years. Okay, so kung ikaw pagpipiliin, which is better, A or B? Assuming that the maximum payback period is 12 years, sabihin mo na. Of course, we are going to choose project A. Why? Because the payback period is faster. It's shorter. Now, if you try to consider the life, okay, kunyari yung life natin, this one has a life of 6 years and this one has a life of 12 years. Sino ngayon ang pipiliin mo? Although project B has a longer payback period, at least it's within the life of the project. But this one, it has a shorter payback period, but okay, the life is shorter. It's 6 years. Although, most of the problems, hindi dapat nangyayari ito, no? Pero may nakita kasi ako noon, example lang ng board exams, parang may ganyan siyang situation na binigay. Okay, so you are going to choose this. This one will be rejected. Also, you have to consider your payback, your cash flows after the payback period. Yun siguro yung one of the weaknesses of payback period. It does not consider the cash flows after the payback period. Let's have an example. Assuming you have project X, okay, you have project X and project Y. Let's assume that the cost of this project is 10,000 na lang. Para madali lang yung mathematics natin. And then you have the following inflows for year 1, 2, 3, 4, and 5. Siguro dito ang inflow niya ay 6,000. Dito ay 4,000. Tapos dito may 100. Tapos wala ka ng cash flow dito. Okay? For project Y, let's assume this one is also 6,000. And then you will have 2,500, 1,500 para sakto. Okay, tapos this one is 2,000, this one is 4,000. This one has a payback period of 2 years. This one has a payback period of 3 years. So, syempre, mas maganda si Y in terms of payback period. But if you try to look at the cash flows after the payback period, mas malaki yung payback period naman ni Y. So, ano magiging decision namin? Well, it really depends, no? If you're strict with payback period, take note, okay? One of the strengths of payback period is that it's easy to use and it emphasizes on liquidity and risk. Siguro, mas maganda pa rin si X kasi 2 years lang na-recover mo na. Ito, you still have to wait for 3 years. Siyempre, habang tumatagal yung duration ng project, mas mataas yung risks involved, no? Kaya doon sa mga cash flows na mas malayo. Okay po. So, yan. Now, if you think that, well, the risk involved in this project, especially for cash flows on year 4 and year 5 is low, siguro, pwede mong ignore your payback period and choose project Y because it has more cash flows. So, depende yan sa risk ng mga cash flows natin. Okay po. So, ayun. So, those are just some of the things that you have to consider. Okay. Now, again, take note. Some things that you have to remember. Okay. In payback period, we focus on the cash flow. So, your depreciation is not considered because that is not a cash item. Okay? So, ayun yun. Ano ba? It ignores profitability. And ang focus niya ay liquidity. And of course, the risk. Okay. Now, let's continue. You now have your accounting rate of return. Accounting na yan. Accounting rate of return. This one, we're going to use your income. The emphasis is not on cash flows. The emphasis is more on income. More on the increase of income versus your average investment. Okay? And what do? We simply divide them. Okay, so let's try to compute. Okay, pag sinabi nating increase in income, ano ba yung increase in income natin dito? Ayan. You have a cash flow of 500, but that will be reduced by 2,000. So why do we remove 2,000? Ano ba ito? Ito yung depreciation na pinag-usapan natin kanina. Okay? Ayan. Why do we have to remove that? It's not a cash item. O nga, kasi income yung pinag-uusapan natin, accounting rate of return. Okay? And in income, you have to deduct your depreciation. So now you have 500 as the increase in your net income divided by your average investment. And how do you compute for your average investment? You have the beginning plus ending divided by 2. Now, if the problem is silent or sometimes sasabihin naman niya, it will be depreciated to 0 or the salvage value is 0, then the ending balance of your investment is 0. So that will be 10,000 plus 0 divided by 2. That's why in some books, you will just see 10,000 divided by 2. Okay? Originally, this should be beginning plus ending balance divide by 2. So this one will be 10,000, this one will be 0. So if there is a salvage value, papalitan mo yung ending balance. Okay, ending balance ng salvage value, okay, divided by 2. So that's now your simple average investment. Okay? So what is 10,000 divided by 2? You will now have 5,000. So 500 divided by 5,000, you will get your accounting rate of return at 10%. Okay, so ayun. Now, that is if we consider your cash flow before taxes. Sir, paano naman kapag after tax? Okay, so instead na 2,500, the increase in income will be 2,300 minus 2,000. Or in this case, that will be 300. Or you just compute. For the income. Yung gaya nung ginawa natin earlier, you have 2,500 less 2,000, you will have 500. Okay, less 40%. Okay, na 200, ang maiiwan ay 300. Okay po? And then you now have your average investment of 5,000. Okay? So, you will now have, pagkano po ito? Okay, that will be around 6%. Okay? So, ayun. Ano pa ba yung mga kailangan malaman dito? Tapos, for emphasis lang. Ano yung mga kailangan yung malaman dito? You have, nagloko na. Ayun. Number 1. Your depreciation is considered. Yan. Kasi income na yung usapan, hindi na siya cash flows. Okay? And based on this example, average investment tayo, pag minsan, it's possible that it will be based on initial investment. If it's based on initial investment, yan, you're going to divide this, instead of 5,000, you're going to divide that by 10,000. So, magiging mas mababa. So, you try 5,000 divided by 10,000, ay 500. 500 divided by 10,000, hindi, parang mauulit yata siya. Ay, hindi, magiging mas mababa siya. So, that will be around 5% na lang. Okay, so if this one is 10,000, this will become 3% na lang. Okay, so, ayun. Next, some things for you to remember, no? We compare your accounting rate of return with the minimum rate of return. Minimum accounting rate of return. Iba po yung minimum required rate of return, no? Or which is based on cost of capital. Okay, you can also have your minimum net profit margin. Yan. So, if it's higher, then you accept the project. Okay po? So, ayun. Some things for you to remember when you compare your methods and your payback, NPV, and internal rate of return. Dito, nakasummarize na. Feel free to screen capture, pero basahin ko na lang para sa mga ayaw ng magbasa. For payback, syempre, number 1, it's easy to understand and use. And that's my favorite. And it emphasizes on liquidity. Diba? Cash, not profits, is king. Kaya nga lang, your payback period, it ignores the time value of money. Kaya may naka-imbento ng present value payback. Present value payback, okay, as their solution. You can use your payback, it's just that you compute for the present value of your cash inflows muna. Ayan. It also ignores cash flows after the payback, gaya na pinakita ko kanina, and it does not measure profitability. Okay, now there is another tool. Okay, Okay, you have your payback reciprocal. Ayan, yung kabaliktaran ng formula, payback reciprocal, and it's another modification of payback. It's just that it eliminates the issue on size. Diba? So, ayun. NPV, it emphasizes on cash flow, so that's the strength, no? It recognizes time value of money, okay? And it assumes discount rate is the reinvestment rate, okay? Which is more realistic naman, okay? Ganoon naman yung cost of capital in financial management after considering all the different cost of financing. Ito yung pinakamalapit na cost of capital mo. It's also easy to apply. Kaya nga lang, it favors larger, longer projects, and it assumes no change in the required rate of return. Okay. Compare that to internal rate of return. Okay. Parang net present value din yan. It emphasizes cash flows, considers time value of money, and it computes the true return of projects. Okay. It's just that IRR is assumed to be the reinvestment rate, okay, which is sometimes not realistic. No? Imagine your cost of capital is, let's say, 5%, and then your IRR is 25%. Ang taas-taas. Meron ka bang pwedeng paglagyan ng pera mo at 25%? Diba? Kung ano compute mo lang na cost of capital mo is around 5%. Hindi na siya masyadong realistic. Your profitability index can be used to compare projects with different sizes. And this is the solution, no? For those who'd like to use the net present value, but you cannot use that to compare projects with different sizes or with different duration. Ang sagot dyan, profitability index. The emphasis is on cash flow pa rin, and it also recognizes the time value of money. Ayan. It favors larger, longer projects and assumes no change in the required rate of return. So, parang net present value din. And your accounting rate of return, this one is the easiest kasi accounting income yung pinag-uusapan natin. Okay? And it's more parallel. In some books, they use that term. It's parallel with the movement in your income statement. Kaya nga lang, it does not emphasize cash flows, that's the weakness, and it does not consider the time value of money. Eh, sabi nga natin, mas maganda if you consider the time value of money. This is one of the reasons kaya hindi masyadong ginagamit yung accounting rate of return kapag long-term decisions ang usapan. Okay po? So, yun. As a summary, kay decision guideline, actually, pwede pagsama-samahin ito eh. Okay? As a review, your project, your net present value will be accepted if it is greater or at least equal to 0. Because if it's greater, it means that it was able to earn the minimum required rate of return or above the minimum required rate of return. If it's equal to 0, the return is at cost of capital or minimum required rate of return. Pagkabaliktaran yan, you are going to reject that. And it follows, no? If the net present value is greater than 0, your profitability index will be greater than 1. Tuloy-tuloy yan, lalo na tong tatlong to. Ayan. Once your profitability index is greater than 1 or NPV is greater than 0, we expect that your internal rate of return is greater than the minimum required rate of return or your cost of capital. Okay, so pag binaliktad mo yan, pati itong dalawang tool na to ay mababaliktad din. Yun, okay. Payback period, okay, it should be less, no? It should be less or equal than the minimum payback period of the company. The shorter the payback period, the better. Okay, so that's one. And for accounting rate of return naman, okay, the higher the accounting rate of return, the better. Okay, so those are your basic decision guidelines. Okay, so some enhancement. Okay, if you want to improve your skills in using the tools in capital budgeting, okay, number one, you should know how to compute for the time value of money factor, yung present value factor natin. Dalawa lang naman yan eh, di ba? Kapag annuity or periodic, and then you have your one time, no? One time or lump sum factor kung tawagin. And that will be discussed in another video kasi humahaba na tayo. You also have, ayan, how are you going to compute your NPV or profitability index or IRR if there is uneven cash flow? Okay, so ayan, pag-aralan niyo yan. And of course, how do you interpolate, okay, if you are using the internal rate of return? So ito yung mga skills na kailangan yung pag-aralan if you want to improve your capital budgeting, your skills in capital budgeting techniques. Also, idagdag natin dito, mas maganda if you know how to use your financial calculator. Okay. And in relation to this, you should also know how to use the present value tables. Okay, marami yan. So, you have the present value and future value. So, present value, mahati siya sa tatlo. You have your annuity, so the periodic factors. You have your lump sum, PV of 1, and then you have your annuity due. Okay, so ganun din po sa future value. Pero, most of the time, ang ginagamit lang natin dito ay PV of 1 and annuity of 1. Okay, so that's your capital budgeting techniques. Okay? And we'll try to come up with other discussions, no? A different set of discussion for this one, kung may time pa po tayo. Okay, so I guess that's it. Okay, thank you.